Hi everyone, it's been a while since I last covered the line chart. So in this video, let's cover the bullish and bearish Elliott wave scenarios on the weekly time frame on a line chart. Now a line chart is interesting compared to a candlestick chart because the measurements are slightly different, as a line chart, the one I have here, is based on candle closes, not including the wicks. Now on the chart, you see the bullish scenario, an impulse to the upside. 1, 2, 3, 4, still looking for new all-time highs, moving ever so close to a 6-digit number per Bitcoin. Your wave 2 here retraced to the 0.236 Fibonacci, taken from the start to the end of your wave 1, which is a rare target for a wave 2. Now what you can also see is the vertical line on my chart here, that is a fib time taken from the start to the end of your wave 1, comparing wave 1 with wave 2 in time, and you can see that the low was made exactly on the 1-to-1, meaning that time-wise wave 1 and 2 are exactly the same, which is perfectly fine. Now compared to the candlestick chart, on the line chart your wave 3 perfectly hit the 1.618 trend-based fib extension taken from the start to the end of 1 to the end of wave 2, which is a common target for a wave 3. Then we have the most common target area for your wave 4 here, the 236382, taken from the low to the high of your wave 3, currently nicely respected. And maybe even more interesting, with regards to time, this wave 4 on a line chart did indeed end after the 1-to-1 fib time, which is also different compared to the candlestick chart, where the low was made just before the 1-to-1 fib time. Now these fib times here, the 1 and the 1.618, are taken from the start to the end of 2 to the end of wave 3, comparing wave 2 with wave 4. And most commonly, a wave 4 is a bit longer in time than a wave 2. So on a line chart, we can actually nicely see it because of the low over here made after the 1-to-1 fib time. Now what we're eventually looking for is a wave 5 to the upside. There's different ways to calculate a wave 5. At the moment I only have the 1-to-1 here on my chart at 102k, but if you're interested, another way is to pull a fib from the start to the end of your wave 4, toggle on the 1.236 and the 1.618, giving you 75.8k to 83.8k, and then a third option is a trend-based fib extension from the start of 1, end of 3 to the end of your wave 4. Look at the 0.618, 137k. Now if you then look at this impulse with the help of a couple of channels, then this is a base channel taken from the start of 1 to the end of 2 to the end of wave 1. What you want to see in an impulse is a wave 3 moving out of the channel and a wave 4 to come back to the base channel. Now you can see here that we hit the midline of the channel perfectly. So far, well respected. This is exactly what we like to see. On the chart now is a trend channel taken from the end of 1, end of 3 to the end of wave 2. What we're looking for here is the trend channel to break, price to move below the lower trend line, increasing the probabilities that the range over here is a wave 4. If we are looking for a multi 1-2, which would be 1-2, 1-2, and then a very big wave 3 to the upside, then preferably your second wave 2 is shorter in time compared to your higher degree first wave 2, which is not the case because we broke the trend line. So in the multi 1-2, preferably what you see is 1-2, 1-2, and maybe even shorter 1-2, and then eventually lift off in a bigger wave 3. So the fact that price here broke the channel increases the probabilities. The range here at least is a wave 4, and of course your most bullish alternative remains a double 1-2. Now here this is the end channel, which is taken from the end of wave 2, low of wave 4, end of wave 3, and what you're looking for is a wave 5 to preferably end somewhere around the mid channel or the upper half over here. Now as mentioned, your 0.618 target is still at 136k, somewhere higher over here, but you're looking for price to end somewhere here in that channel. If we then look at the bearish scenario, then in the bearish scenario, we are looking for a sideways corrective structure here in a WXY with a flat in W, double zigzag in X, and then a wave Y to the downside. Now a wave Y can be a zigzag, triangle, or a flat, meaning A zigzag, being a 5 wave structure, currently very unlikely based on the local time frame structures here, because what you need to have for a zigzag is an impulsive move to the downside, either a 1, 2, 3, 4, 5, then a retracement, and then your wave C, or a diagonal. But a diagonal here doesn't really work. It's expanding, very rare, never preferred unless everything else fails. So a zigzag over here, not the greatest probabilities. A triangle in a wave Y is very rare, which then leaves us with the flat option, which would be absolutely hilarious, because in a flat what you're looking for is this to be a wave A, then get a wave B, and then get a wave C to the downside. Target would be a 31.6k, and preferably your wave Y is finishing after the 0.618 here on the chart, taken from the start to the end of W to the end of X, which is March 2025. If we then look at the probabilities of the different scenarios on the line chart, the probabilities are no different compared to the candlestick chart. It's just that the measurements and the targets are a little bit different. Now, number one, we then have the bullish scenario. This remains your higher probability scenario, still looking for the all-time high to be taken and the wave 5 to the upside, with the alternative being a double 1-2, 1-2, 1-2, and bigger continuation to the upside, with then on the number 2 spot a bearish WXY, where the probabilities are higher for a flat compared to a zigzag, which basically means that even in the bearish scenario at the moment, preferably you still take out the all-time high, and then a flat structure is going to be your bearish scenario inside this wave Y. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.